BCE's stock just made a bullish crossover, but does that mean it has bottomed out and that it's a good buy right now? In this video, I'm going to take a look at both the technicals and fundamentals for BCE to see if it's a good buy at around $33 a share. There's been a lot of downward pressure for BCE stock in recent months, but recently its 20-day moving average crossed above its longer 50-day moving average, as you can see here with this green line crossing over the red line. Now that's a bullish crossover, which could trigger more buying, as technical analysts and investors who rely on charts may see that as a reason to buy the stock, especially as it's trading around its lows for not just this past year, but for more than a decade. In fact, BCE hasn't been trading this low since around 2010. It's the last time that you could have bought the stock at around these levels. You can see right around here. And so this crossover could suggest that the stock may have finally bottomed out, and it's forming a support at around $33 a share. BCE stock was already struggling over the past year, but then in November, it announced its planned acquisition of US-based internet provider Ziply Fiber. While it's an intriguing move for BCE to expand its operations in the US, the concerning news for dividend investors was that the company said it would be pausing its dividend growth until its dividend payout and net debt leverage ratios start to trend towards its targeted policy ranges. So for now, there aren't going to be any dividend increases coming for BCE stock. Not this year, perhaps not even next year. A lot is going to depend on how that Ziply turns out for BCE and how much money it may need to steer toward that acquisition and growing its operations. But that news triggered a sell-off in the stock. And usually when a stock has one really bad day, that extends to multiple days. It usually isn't just one and done. And that's what happened with BCE, as the decline persisted for weeks. And some investors may have been waiting for that next dividend payment before unloading their shares. As you can see, another drop around the time when it paid its dividend in December. Now, however, there's a lot of sideways movement with the stock, and things appear to be stabilizing. And even if the company's latest earnings numbers didn't seem to have a significant impact on the stock price, which is good news, there weren't any huge surprises or reasons for investors to panic even further. The company actually stated that it met its targets for the year. And while its sales were down 1%, that's not a huge decline. With Ziply, there will be likely much more growth for BCE, and the big question is how its bottom line and cash flow will fare. In 2024, the company's adjusted net earnings fell by 5% and its free cash flow declined by 8%. That's not great. For 2025, the company is expecting sales to be within a range of -3% and +1%. So there's not much growth on the horizon. But this also excludes the impact of Ziply, since that deal isn't expected to close until the second half of this year. What's encouraging, however, is that BCE is expecting free cash flow to rise between 11% and 19%, which is good news for the dividend, and that's why I think for the foreseeable future, it's still safe. I think at this stage, all the bad news is likely priced into BCE's stock, which is why there wasn't much of a reaction to its earnings numbers. Things can always change, but I think BCE has taken such a beating over the past year, it's down more than 30% in just 12 months, that it may be bottoming out right now and possibly hitting a bottom. But even if it falls further, I think there's a good chance that you can make a great return from investing now and hanging on. If nothing else, that high dividend can help offset potential losses and give you a bit of a buffer. Right now, BCE's dividend yield is around 12%. BCE could be an ideal stock to put in your TFSA because you'll need it to probably sit there for a while. This may not be a short-term trade just because it can take some time for investors to warm up and trust BCE again. And many investors may be waiting to see how that Ziply acquisition turns out. But this is a stock that looks appealing right now, and it may be worth taking a chance on one of Canada's leading telecom providers, because there could be a lot of upside from this stage. That wraps up this video. If you did enjoy this unbiased analysis, as I don't have a position in BCE, then please make sure to leave a like and subscribe for more of these types of videos. Thanks so much for watching.